Good morning. I'm James Qantas, editor and publisher of Resource Opportunities. Thanks for joining us. And joining us today is Tim Termuende, CEO of Taiga Gold. Hi, Tim.
Hello, James. How are you? Good morning.
Good. How you doing?
Good.
So have you been holed up through in Cranbrook for the last year as we go through this COVID-19?
Oh yeah. It's been quite a year. Haven't been on an airplane since PDAC last March, so that's probably the longest in the last 50 years in my life that's been the case. But we're managing, getting outside a lot, getting a lot done at work. Actually, we're very busy right now. Surprisingly, with COVID, one of the side effects is it's been very promising and good for our companies. That's for sure.
Right. Have you been out to Saskatchewan at all to the project?
Not lately, no. A lot of the areas we work in have native communities nearby, and they would just assume that we're not there unless we need to be. I mean, as essential workers, we've been able to carry out programs. We've got drill crews out in those areas right now, but if we don't really need to be there, so as far as tours by the brass, we've been trying to keep that to a minimum.
Yeah, makes sense. So maybe we could touch quickly on this commodity sort of bull market that's been happening for the last year. Copper's doubled, base metals seems like everything's up, and gold has participated, but not certainly not as high as a lot of people had expected. What are your thoughts on is the gold narrative still intact?
I think it's stronger than ever. Personally, I'm a gold bull. With the amount of dollars that are being printed right now around the world as COVID relief as much as anything, I think it's inevitable that gold has to go up through that. I mean, there's a lot of arguments that Bitcoin and other cryptocurrencies are going to take the place of gold, but I think there's nothing like the stability of gold when push really comes to shove. I think there will be a lot of upward pressure on gold. I mean, we saw it go to 2,100 US. I think people forget too that for us anyway, our projects are in Canada, and gold right now in Canadian dollars is still, today I just looked, it's $2,200 an ounce in Canada, which is extremely robust for most projects. They should be able to make money at those prices, and I think they're going higher.
Mm-hmm. Okay, good. So I've covered Taiga Gold like in my newsletter out of the gate, and what attracted me to the story was I consider it a de-risked gold exploration company, in a sector where there's a hell of a lot of risk. But maybe you can take us through that. So there'll be a live Q&A after. So at the bottom of your screen there, you'll see a question mark in a circle there. So submit your questions there, and why don't you take it away, Tim?
Sure. Okay. I'll introduce Taiga Gold. It's a relatively fresh company. Let me just go through the particulars here. Here's our forward-looking statement. That's on our website. So if people want to read that in detail, read the fine print, that's there for everybody. As I mentioned, Taiga is a new company. It started in 2018 and was a spinout from Eagle Plains Resources. Eagle Plains has done a number of spinouts over the years. Probably our most successful was Copper Canyon, which was taken over in a hostile merger, turned friendly with NovaGold in 2011. So, our management team with Taiga is almost identical to our management team with Eagle Plains. And Eagle Plains has delivered, people are looking for 10 baggers in this industry. We've delivered them in spades over the years. And effectively, our spinouts have acted as dividends to our shareholders. So we've taken projects that sort of rise above the rest and spin them out on their own and give Eagle Plains shareholders shares in these new companies. So this next chart, it's a little complicated at first, but the different colors are the different spinouts from Eagle Plains. The orange color at the bottom is the actual share price of Eagle Plains moving along over the years. And the different bars above it are sort of the accretive value of the spin-out companies that we've had that come from Eagle Plains. So Eagle Plains is kind of the grandparent who has sort of spawned these different companies over the years. So you can see as Eagle Plains trading at 18 to 19 cents right now, over the years, the spinouts that we've effectively dividend to our shareholders creates sort of an effective value and a cumulative value of Eagle Plains at about $1.40 a share. So if people, it's a long-term approach, but it's a very risky business. And by doing this methodology we do, it sort of de-risks the company in an extremely risky business of mineral exploration. So we're quite happy with, with the way that's worked out over the years. Effectively, the spinouts too are designed to make it very easy for a partner company to acquire the project that's been spun out. So when we created Taiga Gold, we put a number of projects in that we thought would be attractive to our partner SSR Mining. More on that later. But we listed in 2018 on a 1-for-2 basis. So 2 shares of Eagle Plains would get you 1 share of Taiga. Over the years with these spinouts, the value of these different spinouts we've done works out to about $65 million. So even though the Eagle Plains market cap is a modest $18 million right now, we've actually dividended out in effect most of the value of our company over the years. And we keep intending to do that as Eagle Plains. We've got a number of companies, or a number of projects, with a lot of partners and a lot of work being done. And we're just kind of waiting for the next project to light up. So right now, Taiga itself is focused on gold in Saskatchewan, gold exploration in Saskatchewan. Our project, our flagship project is the Fisher project, which is now in a joint venture with SSR Mining. We've got 80 million shares outstanding overall, another 25 fully diluted with warrants and options outstanding. And Taiga sits right now with 5 other properties other than the Fisher property. 3 of those properties have option partners right now. Another 2 of them are still 100% owned by Taiga, and we are planning to do work on those ourselves. Okay, so directors and management, as I mentioned, is almost a mirror of Eagle Plains Resources. Eagle Plains has been trading for 25 years now on the various stock exchanges in Canada, and the board of directors of Eagle Plains is very seasoned. Myself, I'm the president of both Eagle Plains and Taiga. I've worked all over the world, most prominently in Western Canada. That's where the focus of my career has been. I also work closely with Chuck Downey, who's the VP Exploration. He's a director of the company. He's also worked with me almost throughout his career. We both started working with Cominco in the early days back in 1987, actually, and worked together ever since. We've also got Paul Reynolds, a geologist, very seasoned exploration geologist who's had a number of successes in his career. He's a great sounding board for a lot of the decisions we make and work we do. Jesse Campbell as well has worked with us for almost 20 years, or maybe more than 20 years. He runs Terralogic Exploration, which is a subsidiary company of Eagle Plains, and he is the president of that and oversees all the work that Terralogic does. Also, Glenn DeDuke, he's our CFO, a very seasoned financial person. Worked with Glenn for over 20 years, almost 25 years. So together we've got a very strong team moving forward. This is a look at the share structure and share price of Taiga. Again, I mentioned 80 million shares outstanding, fully diluted about 108 million shares. Directors and close insiders own about 15% of it. Dundee, another 1.5%. Significantly, Eagle Plains still holds a number of shares of Taiga that was a function of the spin-out. Eagle Plains owns 12 million shares of Taiga. So together, we're moving forward with a fairly tight share structure. As I mentioned, all of our projects are in Saskatchewan. All the Taiga projects are in Saskatchewan. So we're focused along the Trans-Hudson Corridor. It's an orogenic belt that stretches from Hudson's Bay down through the majority of Saskatchewan and into the Dakotas in the United States. It has a number of high-grade gold occurrences along it, producing gold occurrences along it. The most substantial is located down in South Dakota, and it's the Homestake Gold Mine, which produced over 43 million ounces of gold in its day. We see the Trans-Hudson Corridor as an extremely unexplored belt. There's a number of reasons for that. A lot of them are political in Saskatchewan over the years. But we estimate that the amount of drilling within this Trans-Hudson Corridor, which is a very prospective belt of rocks, is probably 1/100th of the activity that we've seen elsewhere in Canada in, say, the Abitibi Belt in Quebec or the Red Lake Belt in Ontario. They're very similar geologically, but the exploration focus has been far less in Saskatchewan. This is a look at Taiga's project portfolio. So I'm afraid I don't have a pointer here, but the core of our project, or our flagship project, is the Fisher property in the top half of the map. It is located adjacent to the Seabee Gold operation, which is operated by SSR Mining, which recently did a merger with Alacer Mining. So SSR is a very large mining company. Its market cap is about $7.5 billion right now. And one of their core assets is this Seabee Gold operation. So you can see our Fisher property actually adjoins the Seabee Gold operation to the south, and also to the north. We've got a block of claims up there too. And those are the other properties I mentioned earlier: the Chico, the Leland, the Orchid, the Mary Lake, and the Sam property. Now, all these properties, the one thing we have in common is with those properties is we feel that they would be attractive to SSR based on geology, closeology, just the stage of development of these projects. They all, I think, would be a good fit for SSR's project portfolio. We've staked them all over the years on our own. We started staking in Saskatchewan back in 2013. So we've been in that area for a long time. In fact, our first staking we did in Saskatchewan, the first day that staking came to be, map staking came to be, we were ready to go and stake the northern part of the Fisher property. And this was the result of about a month of research that our research geos did. And we had them pick the best, most prospective ground they could find in Saskatchewan. They worked for about a month ahead of time doing research, and they targeted this Fisher area. So that's how it came to be. So part of our story here too, again, we staked the Fisher property in 2013. In 2016, we were surprised to see Silver Standard come in and take out Claude Resources for about a $350 million transaction. Claude Resources were the previous owners of the Seabee Gold operation. SSR Mining too, to further complicate things, was the name of Silver Standard. Silver Standard changed to SSR a couple of years ago, changed their name. So essentially, we were next door to Claude Resources, now SSR Mining. So soon after buying the Claude Resources, SSR, we were negotiations to look at the Fisher property. They always obviously had their eye on the Fisher property. Soon after buying the Seabee Gold operation, they put in about a $90 million expansion to the Seabee Gold operation. So that actually increased their hunger for more ore. And again, there's only a certain amount of land and opportunity on the Seabee Gold operation project. So it only makes sense to come further along the south and work with us on the Fisher property. So we came into a 60% option deal back in 2016 with SSR. To earn their 60% interest, they're required to spend $4 million in exploration over 4 years, make a $100,000 cash payment and $750,000 other additional cash payments annually. They also reimbursed us any money we had spent so far in the Fisher, so we got a $400,000 balloon payment at the start too. So we were absolutely risk-free going into Fisher. So over the last few years, they had completed not just $4 million in exploration, but had actually spent over $12 million in exploration. And so recently, about a month ago, they exercised their option to earn an additional 20% and form a joint venture. So with that formation of the joint venture came to us another $3 million cash payment. So we've received about $3.8 million in total, which is all our money back, obviously, plus a lot more. We also receive annually a $100,000 annual payment for an advance royalty. We've got a 2.5% royalty on the property. This is a look at the Santoy deposit, actually, where it outcrops on surface. It's not that impressive on surface. We've seen areas that look a lot like that. This surface outcrop ran a few grams per ton. But as they follow it down to depth, those ribbon veins actually can widen to 20 meters wide and produce grades, over these 20 meters of 20 to 30 grams per ton. They've reported in a couple cases in that Santoy area over 1,000 grams per ton out of material like this. So this is kind of the target area. This is what the Santoy shear looks like on surface, and that's the focus of our work moving forward. So this is a look at the Fisher property in orange and the Seabee Gold operation in green. When we first staked the Fisher property, a few people said, you're wasting your time and money. The geology stops at the border. If it didn't, Claude Resources would have staked much further to the south. But, we had an idea and we had hope that basically the red band is the Santoy shear, and that's what they're mining at the Santoy deposit at the Santoy mine. If you could advance the slide, please. Yeah, so this is the Santoy shear going all the way through our property. We've got about 20 kilometers of it, and it's the Santoy shear that they are mining at the Santoy mine right now, and it's another shear, an east-west shear that they were mining at the Seabee mine. The Seabee mine is mined out right now, but it now provides the mill and infrastructure accommodations for the Santoy mine, which is located about 14 kilometers to the east. So they now truck ore from the Santoy mine to the Seabee mine. The Santoy mine itself is only about 1.5 kilometers from our property boundary, from the Fisher property boundary. So over the years, SSR geologists were testing the idea that maybe the Santoy shear did continue on to the south, and we were very happy, and so were they, to see that sure enough, the Santoy shear does go all the way through the Fisher property. Again, 20 kilometers of it. And so more than 20 kilometers of it. So SSR over the years now has been focusing on exploring along the Santoy shear. So the first couple of years, they were doing a lot of drilling and basically testing the shear along about the northern half of its strike length. Things were plodding along. They were getting sniffs here and there. But last year, with the winter program in 2000 that was started in January, finished a little prematurely due to COVID in March. They shut drilling down before they had tested all their targets. But they went in to test 6 targets along the Santoy shear that they had sort of narrowed down to being the most prospective. Of these 6 targets, they got to 4 of them. And of these 4 targets, they actually hit ore grade mineralization in 3 of these 4 targets. So it's really a remarkable exploration success that I don't think enough people appreciate and understand. But the project that they've been focusing on, or sorry, the showing area that they've been focusing on lately is the Mac North zone. A lot of the reason that the Mac North has been getting more attention than the other discoveries they've made lately is because it is right at the camp. They built a large camp here over the years. They've just expanded it recently. But the Fisher camp is walking distance to the Mac North zone. So the last drilling they did last fall was focused on the Mac North zone. They also had discoveries up to the north at the Yin zone. Again, they had you can see the numbers there, drill intercepts of 2.29 meters of 13 grams per ton. That would be ore grade material on the SGO property. They also made discoveries nearby there at the CGR West zone. Again, drill intercepts 1.5 meters of 12 grams per ton. They've also got other zones to the south that they have not fully tested yet and expect to go in there. But what is most significant now is what we've seen at the Mac North zone is the mineralization. Now they've been able to define it. They've been able to now predict where the zone is. The ore mineralogy and the geometry at Santoy is a bit complex. It's not just a sheet. It's not just a vein. It's actually a shoot on a vein. So these things are, you could describe them best as a sort of a squished cigar tube, a squished tube. So these are cylindrical bodies and in an odd angle in space. And until you can sort of define the geometry of these, it's very hard to tag onto them and be successful with your drilling. But they now are very confident that they've got the Mac North zone figured out. Interestingly, too, the geometry of this plunging structure is very similar to the geometry at Santoy. So, we like to think, and we have every reason to believe that we've got a very, very similar system to what Santoy, the Santoy mine itself is and what they're producing right now. Again, significantly, with the discovery of continuous, predictable mineralization at Mac North, open in all directions also, is the ability to predict that, and also that we've sort of proven a proof of concept that the ore mineralization did not stop at the border. The Santoy shear did not stop at the property boundary. It continues well into the Fisher property. And it just shows that, you know, there's very high prospectivity for more discoveries along the Santoy shear. You could think of it kind of as a string of pearls along the Santoy shear. So I think it's very early days yet for discovery and for development of ore mineralization. The next round of drilling will focus on the Mac North zone. We understand we haven't been into formal discussions yet on the exact layout of the next drill program, but we understand that one of the goals of the drill program will be to establish the first maiden inferred resource at the Mac North. At the same time, we will be looking for other bodies of mineralization along the Santoy shear. You can advance, please. This is a look at the Mac North zone in cross section. So if you see the inset map to the lower right, you can see the AA prime section line there. So that's looking along that line. You're looking sideways at the mineralization at Mac North. There's been a number of drill holes sort of off plane, but they've been projected to that plane. So you can see all the various drill holes that have pierced the Mac North zone. And you can see the tenor of mineralization along there. You can see that it is, again, a very predictable pattern. Interestingly, you also see mineralization in the hanging wall of the Mac North zone, which is also a similar story that they're starting to see at the Santoy zone to the north on the Seabee Gold Operation property. They have a hanging wall zone too to that. So we're very encouraged by again, early days discoveries, but now the next drill program will be to focus on the Mac North zone itself and defining a resource. Next slide, please. This is a look now 90 degrees to the last section you saw. This is a long section. So this is showing how the drill holes are piercing the Mac North zone itself. The arrow at the top of the image there shows the plunge of the zone. So you can see all the drill holes in red are high grade hits. In orange are sort of medium grade, but still above ore grade cutoff. And the stars in that image are visible gold that was seen in the hole. So you can see now every hole along that plunge. The plunge is about 200 meters wide. So the zone is 200 meters wide. From surface to the lowest hole, hole 60, is about 750 meters. And you can see hole 60 hit as well. It had VG in it, but there's a lot of room now to expand drilling to depth and to the north and south. So it is a zone open in all directions. And again, it's one of what we hope are many mineralized bodies along that Santoy shear. Next slide, please. So our project milestones, Taiga is a very new company, only 3 years old, just coming up on its third anniversary. In that time, we have completed a lot of work on Fisher. We've received, again, $3.8 million in cash. SSR, again, we can't take credit for the exploration work that they've done. They've done a fantastic job, but they have certainly now made a significant discovery at the Mac North zone, in addition to other additional zones on the Santoy shear. So we're very happy with the work to date. We've seen over $12 million in exploration completed by SSR on our properties. They've done over 113,000 feet in 87 drill holes. And again, discovered mineralization all along the Santoy trend. We've received, $3.8 million in cash. And again, I think we don't get a lot of credit for our NSR that we hold outside of the JV. So Taiga holds a 2.5% NSR on the majority of the claims in the Fisher property. There's a number of claims that there is an underlying NSR that sort of comes off of ours, but for the majority of the claims, we have a 2.5% NSR. And that NSR also pays us $100,000 a year annually until production starts. So for 2021, we see a lot of catalysts coming. We see additional drilling. We expect drilling to start in the next 2 or 3 weeks on Fisher again, and that should go well into the summer. There may be a breakup period in the spring when it's just too tough to work, when things get too wet. But we will be drilling aggressively on the Fisher property. Again, 4 zones have been discovered that will be focused on, and there are still a couple other high priority zones that they didn't get to last year that will be targeted this year. Again, we've seen continuity of mineralization at North Mac. We expect to see the maiden resource coming on that at the end of probably this year's drill program. We understand that there may be up to 3 drills turning by midsummer. The program will start with a single drill at the Mac North zone, and I think ramping up over the season. SSR has told me that they've just done another expansion on the Fisher camp. Part of that expansion was to make it COVID safe, so there have been a lot of alterations to the camp layout. Yeah, we expect to see a lot of activity there. So we like to think, we can't promise that, and I certainly can't speak for SSR, but we like to think that we are a pretty attractive M&A target. I mean, they've spent now over $430 million on the Seabee Gold operation. And when they first purchased the Seabee Gold operation, it had call it a production runway of about 5 to 7 years, life of mine. So they are obviously very interested in expanding that mine life on the property. It's been running since the early 90s. They now have paid off all their capital costs. So they actually have a very, very impressive low production cost of under $600 an ounce US for gold. So again, even at $1,770 an ounce US today, the Seabee Gold operation is a cash cow. It's obvious that they're going to want to keep it going as long as they can. And I think for that to happen, they have to, look to the Fisher for a source of future ore. SSR has spent now well over 2.5 times what they were required to earn on the Fisher earn-in. So they've certainly shown that they are more than interested in the Fisher property. And again, being to the north and south of the existing SGO operation, there's really only one place to go to keep that mine running as long as possible, and that's to the Fisher property. Again, the NSR is extremely valuable, and for a company to take out Taiga, they would also get the NSR on Taiga. This was a slide that SSR showed in a presentation a year or so ago. The line in the middle, this is a pipeline to production. The line in the middle is basically the property boundary. So SGO is the Seabee Gold operation to the north, Fisher, the Fisher property to the south. So those different occurrences on the Fisher property may very likely make it to production here over the coming years. And again, these are the targets on the Fisher that have been identified that are going to be advanced and hopefully go to production. Next slide, please. So yeah, again, I've spoken mostly about the Fisher property, but we do have other projects as well that could be catalysts for an increase in share price for Taiga and an increase in value overall. We had just recently, a couple of days ago, completed the drill program on our Leland property. That Leland property is under option to SKRR Exploration, who have been funding all the work so far. Leland is contiguous with the Fisher property and just south of the Seabee Gold operation. So it's about 23 kilometers south of the Seabee mill itself, fully funded by SKRR. So again, no risk to us. The mineralization we are targeting there is analogous to the Seabee shear, the Lionel shear. We also plan on working on our Orchid project later this year. That is owned 100% by Taiga. So higher risk, higher reward for us, but we are set to fund a $1 million drill program on the Orchid project. There are a number of very high grade occurrences on Orchid. There's one area, the Orchid showing itself, that we've received samples of 43 grams per ton, 60 something grams per ton there. It's very, very highly prospective. It's never been drilled in most of the showing areas. So we expect it'll be a maiden drill program for us, but we're very, very excited about what the potential is for that. We also have ground-based exploration programs planned for our Sam property, which is located near Flin Flon, and our Mary Lake property. Sam, we have an option agreement with DJ1 Capital, who will fund that work. Mary Lake is 100% owned by Taiga, so we'll be funding that work ourselves. Next slide, please. That's it. That's the whole story. James, if anyone has any questions, I'd be very happy to answer them. I think James.
Okay, great. Thanks, Tim. So before we get to the questions, there's a survey question here. Will the price of gold reach 2,000 US or fall to $1,500 first? We touched on earlier on the weakness down again today, but looking pretty good in Canadian dollar terms. Okay, so why don't we go to the get started on the Q&A. So Tim, I guess a couple of questions I had. One is with the 80-20 joint venture now. Are you concerned about? I mean, if SSR Mining really ramps up their program, having to, I mean, the spend requirement on your 20% share. Can you talk about that a bit?
Yeah, that's a very good question, and it's basically page one of the rule book of big companies and small companies. In a lot of circumstances, it would be relatively easy for a big company to squeeze out their junior partner by just sort of proposing a $20 million or a $30 million program right out of the gate. You see it all the time, actually. We're not too worried about that for a number of reasons. Number one, we're very financially solid right now. We've got $4 million in treasury. Number two, we have a 20% interest in the JV. So for SSR, if they chose to create or propose a $20 million program, we can easily keep up with that. We can, it's $4 million over the year. The other thing about where the project is situated and just the logistics and topography and a lot of lakes around, a lot of swamps around, it would be very, very difficult for SSR in the exploration stage to even spend that much money in a year. There's certain capacities to doing work. One is a seasonal thing. You've got with the lakes, you've got break up, you've got freeze up, so you're forced to take a break. We also have a very, very good relationship with SSR over the years. So I don't expect that to happen. I mean, we've spoken about that and we don't see it really being an issue. The markets are good right now too. We plan on always having a very strong treasury and being ready to go. But again, with 20% of the project, it would be very tough to get squeezed out.
Okay, that's good to know. Okay, so we've got a question from Harry Sanders asking about the exchange. Would you consider listing on a different exchange than the CSE? Because trading on the CSE is not available to most or to many foreign brokers compared to like the venture or the main board.
Yeah, it's something that we would easily consider. We basically tested the CSE when we did the spin out with Taiga. We've been on the TSXV with Eagle Plains for many years. Actually, we started Eagle Plains on the Alberta Stock Exchange became the Vancouver Stock Exchange, the Canadian Stock Exchange, and then the TSXV. So we've seen it all over the years. We wanted to try out the CSE. It works out well for us. The paperwork is relatively straightforward. It's actually easier to navigate running the company through the CSE than the TSX, we feel. But it's certainly open to discussion. It depends on how much interest we get out of Europe. So far, that's the first time I've actually heard that comment.
Yeah, I've heard it from my subscribers from time to time, like that they have trouble accessing buying stocks on the CSE.
Okay.
Another one, will you need to raise funds anytime soon? If yes, how?
Yes and no. Even with the Orchid drill program pegged at $1 million, that still leaves $3 million in the kitty for the Fisher joint venture and to do our other projects. The Mary Lake project, we plan on funding ourselves. We are looking at financing opportunities right now. During this correction right now in gold, we might want to wait around a little bit and see how things shake out. But certainly financing is on the horizon. It's just not imminent right now.
Okay. How many meters are you planning to drill at Orchid there?
The proposal we have in place right now is 2,500 meters. Again, because it's a winter job and because we plan on a number of short holes to test a large number of showing areas, it will be helicopter supported. So, it's a relatively high price per footage for a drill program, but we think with all the moves and the exposure we're going to get, it'll be money well spent.
Mm-hmm. So is there near surface mineralization there potentially? at Orchid?
Absolutely. We've spent a few years prospecting and doing surface exploration, soil sampling, geophysical surveys. We've got a number of high priority target areas ready to go, and most of those have never been drilled. So we plan on a lot of short holes, moving the drill around a lot, basically prospecting with a drill. But we see, I think, 5 or 6 different showing areas will be tested by holes down to sort of, say, 500 feet, that kind of thing.
Okay. Maybe quickly going back to Seabee, can you just touch on, Tim, like the grades they're mining and how deep the mineralization is and so on?
Yeah, I don't have that slide in front of me right now, and I don't have a lot of Santoy mine slides, but they've told us before that their typical head grade at Santoy is about 9 gram meters, so it's 9 grams over a meter. Their cutoffs are about 3.5 grams per ton. So a lot of the intercepts we've seen on Mac North, and particularly at the Yin showing, which is right near the property boundary, they're well in excess of head grade or ore grade that they would be mining at Seabee itself. So the Seabee mine too has, when they bought it, they had about 1.5 million ounces in proven and probable, I believe, but they've been expanding that over time. But yeah, they see, I think, about roughly a 10-year or forecast now on their property. But again, if they want to extend that, Fisher is the place to go. They're doing a lot of work on the SGO side of the line, but they're doing almost as much, I believe, on the Fisher side right now.
Okay. Another question: what is the flagship project in Eagle Plains? What do you consider
flagship property in Eagle Plains is probably our Donna property. We plan on running that in June this year. We plan on drilling that in June. It's a high-grade epithermal vein system that we believe is sitting on top of a buried porphyry. So it's got a bigger prize underneath it, and that's the way we're exploring it. That's what we're testing for. But yeah, in short, the Donna property, located near Vernon.
Okay. Another one, if you would be bought out of the region, where would your next focus lie? I guess he's talking about Taiga Gold there.
Well, if we were bought out of the region, Taiga Gold hopefully would just go in entirety. So we'd be back to focusing on Eagle Plains. Eagle Plains probably is equally focused in British Columbia and Saskatchewan right now. We did have a lot of projects in the Yukon, but we're finding it increasingly difficult to work in the Yukon. So yeah, our focus is British Columbia and Saskatchewan.
Okay. And then can you briefly discuss overhead and yearly cash costs?
Our overhead for Taiga is about $300,000 a year, our G&A costs. Monthly, I can't remember what we're sitting at there, 40 or 50,000 a month, 30 or 40,000 a month. So our overhead costs are actually quite low compared to a lot of companies. We own our own office building. We're situated in Cranbrook, British Columbia, a small town, like 20,000 people. So we found it very easy to attract young talent. They like to be here. They can buy a house here, no problem. And, you know, for a lot of our geologists, they're going off to work in the field anyway. So if they're home based, they can buy a house for $400,000 or $500,000. They're all over that. So yeah, overhead costs are relatively small compared to a lot of peer companies.
Good. So on the First Nations front, like you touched on it quickly earlier, but can you just talk about the relationship? I think it's fairly important there, right? I mean, obviously it's important generally, but particularly in Saskatchewan, where you guys are.
Yeah. Well, we've certainly learned that consultation is extremely important anywhere, British Columbia, Saskatchewan, in the Yukon. And we've made very serious, significant efforts over the years to ramp up our consultation. Chuck Downey here in our office has done an incredible job of liaising with the Native communities. We've been supportive of a lot of the communities that we work near, and we've actually really ramped up our hiring of local First Nations on all of our jobs. The Leland property, I think, had 6 local hires on there. So yeah, so far our relations are good in that area. There are pockets of individuals that are not in favor of development, but we see that everywhere. It doesn't matter where we work. So it's a question of trying to, involve the communities, trying to support the communities, and trying to get buy-in. And we've been successful with that over the years.
Okay. Which of the discovery zones are you most interested in on Fisher?
Personally, I like the Yin. The grades are very good. It's only a couple of kilometers from there to the actual decline at the Santoy. They hadn't been able to get back to there more for logistical reasons than any other reasons. Like I said, the Mac North is right at the camp, so that's where the focus has been. But I think the grades at the Yin are just as good. They just have very little work done on the Yin so far. So while we're working on the Mac North, I expect we will be starting to learn a lot more about the Yin zone.
Okay, and then Orchid, when do you expect to get drilling there?
Probably in the next couple months. We're looking at logistics right now. We're permitting and planning right now, but we expect to do it in the first half of this year. Again, COVID is a concern there right now. Our nearest community to the Orchid project is Pelican Narrows, and they just recently had a fairly significant outbreak there and a number of deaths, very high proportion of cases there for the size of the community. So we're being pretty careful about that one.
Yeah. And for SSR's results, I guess they release exploration results in their quarterlies.
Yeah, this will change. While the option period was underway, we would receive reports every 3 months, every 90 days. But now that we're in the joint venture and now that we're actually participating in the funding, we actually have a quicker news flow. So again, we haven't had our first program yet as a JV, so we're working out the details. But we expect that drill results will go to SSR. They'll do their QA/QC on them, and then they will be filed on some sort of FTP site or some data portal that we can access. And then so we can put out news on a much more timely basis than in the past as we're doing drill programs here. So we expect it's written into the JV that they have a few days to approve our news releases, and if we don't hear back from them, we can put them out. So we expect a lot more timely news, and we again, frankly, expect a lot more news flow because we're much more active with the other projects now than we have been in the past few years. Again, we just finished drilling Leland a few days ago, so those results will go to the lab. I think they're in the lab now. So the labs are a lot slower these days. The labs themselves are taking 2 to 3 months for turnaround. So as they come out, though, we will be getting them out as quickly as possible.
Okay, and then on Fisher, like, what's the seasonality of the drilling? Like, what are the windows where you can't drill?
Except for freeze up and break up year round. A lot of the drilling is cheaper to do in the wintertime because the low lying areas, the swampy areas, and the lakes freeze over, so you can move drills around, just dragging them with skidders and snowcats and whatnot. Interestingly, a lot of people don't realize this, but the Seabee mine has never had a year-round road to it. It's actually a fly-in operation. But they bring all the heavy equipment in the wintertime. They bring drills and steel and tanks and fuel, everything on ice roads in the wintertime. And then throughout the year, they fly in crews daily. They have a daily fly-in rotation. So because it's a gold operation too, their final product is a gold bar. So that gets flown out however they do their milling operations there. But for the most part, I'd say you can drill from January to sort of mid-April, then take a break for 6 weeks, then from late June to or June to sort of late October when it starts freezing up again. You can even get around those breakup periods by use of a helicopter. So you could continuously work year round there, but it gets more expensive during breakup for certain. Yeah.
I guess finally, Tim, like, could you touch on, with the SSR merger with Alacer, kind of, where Seabee kind of fits and whether, kind of in your opinion, moves up the priority or down or about the same?
Yeah, Alacer's primary asset is in Turkey, but I've spoken to a couple of people with Alacer, now SSR. Also interesting to note that through that merger, even though the name SSR stayed on, most of the senior management came from the Alacer side. So Paul Benson stepped down, exploration manager VPX Carl Edmonds moved on. So a lot of the people that we dealt with more directly have now left, and so we're dealing with the new Alacer people. But I've talked to a couple of them who say that the Seabee Gold operation is very key to their portfolio, and they see a lot of potential in that, and that bodes well for us. Again, most of the equipment at Seabee has been paid for, so they have incredibly low costs for production. So the longer that any company can keep an operation like that running, the better. And I think that's where Fisher comes in, and where frankly Taiga comes in.
Yeah, you touched on the NSR earlier, and that, I mean, for an operation that's producing next door, I mean, that itself could represent quite a bit of value.
Absolutely. We see a number of companies that just focus on purchasing NSRs. We haven't tried to put a value on the Fisher NSR yet, but I would expect that it would be very attractive to royalty companies. And the more success we see in exploration on Fisher at the Mac North and in these other zones, the more that NSR automatically increases in value at no cost to us to do that. It's just a sort of a byproduct of the exploration process. But a 2.5% NSR in an area like that could be quite valuable down the road.
Right. Okay, I don't see any more questions. So thanks everybody for joining us. Thanks, Tim.
Thank you very much, James. Look forward to seeing you in person again one of these days.
Yeah, for sure. One of these days, hopefully soon. Okay, take care.